For 30 years, if you wanted to keep your money safe in the Middle East, you put it in a Lebanese bank. Beirut was called the Switzerland of the East. Marble lobbies, discreet private bankers, interest rates that seemed too good to be true. Millions of people believed in that promise. Lebanese expatriates working in Africa and the Gulf, doctors, taxi drivers, elderly couples who spent 40 years saving for retirement. They wired their life savings home in American dollars, trusting a system that told them again and again that their money was untouchable. Then one day, it simply vanished. Not stolen in a single heist, not lost in a stock market crash, quietly absorbed into a machine that had been eating itself for years. Today, nearly 2 million depositors in Lebanon cannot access their own savings. Estimates put the frozen deposits at somewhere close to $90 billion. For a country of about 5 million people, that is not a financial hiccup. That is the wealth of an entire nation gone. To understand how this happened, you have to go back to the man at the center of it, Riyad Salameh, governor of Lebanon's central bank for 30 years. Salameh was once treated like a rock star of global finance, praised year after year for keeping the Lebanese pound stable no matter what chaos surrounded the country. Civil war recovery, regional conflicts, political assassinations. But stability, it turned out, was an illusion built on borrowed time. Here is the trick. Lebanon's government spent far more than it earned for decades, running up enormous public debt. To keep the country afloat, the central bank needed a constant stream of fresh dollars. So Salameh offered commercial banks something irresistible: absurdly high interest rates if they deposited their dollars with the central bank. The commercial banks, in turn, offered high interest rates to ordinary depositors to pull in even more dollars from abroad. Depositors handed over their savings. Commercial banks handed the money to the central bank, and the central bank used those same deposits to pay off yesterday's depositors and keep the government running. Financial experts have compared it, bluntly, to a Ponzi scheme. New money coming in was used to make old promises look real. As long as fresh dollars kept flowing into the country, the illusion held. But illusions built on debt always meet a moment of truth. By 2019, Lebanon's economy could no longer attract enough new dollars to keep the wheel turning. The government had ballooning debt, endemic corruption, and a political system so fractured that basic reforms were impossible. In October 2019, mass protests erupted across the country over new taxes and a collapsing standard of living. Within days, panic spread through the banking system. People rushed to withdraw their money. And the banks, quietly, without ever officially declaring it, simply stopped letting them. There was no law passed. No formal announcement that deposits were frozen. Banks just began imposing informal rules. You could withdraw a few $100s a month, only in Lebanese pounds, at a punishing exchange rate, no matter how many dollars you actually had in your account. People who had $100,000 saved for their children's education were suddenly told they could touch maybe $200 a month. The currency itself, meanwhile, collapsed. The Lebanese pound lost roughly 90% of its value, meaning even the money people could withdraw was worth a fraction of what it used to be. Prices for food, medicine, and fuel skyrocketed. Within a couple of years, the World Bank was calling it one of the worst financial collapses anywhere in the world in more than a century. More than 3/4 of the population fell into poverty. And here is the part that turns grief into rage. While ordinary depositors were locked out, the well-connected were not. Investigations later revealed that in early 2020, right as regular families were being told there was no money to give them, the central bank quietly extended $8 billion in loans to Lebanese banks, using what little reserves remained. Politically connected clients and large depositors reportedly found ways to move their money out of the country entirely, transferring funds abroad through channels that were closed to everyone else. People with the right relationships got their dollars out. People without them were left holding a currency in free fall. The human cost is almost impossible to summarize in numbers. Retirees who spent their entire working lives building a nest egg found themselves unable to afford medication. Families who had saved for surgery watched loved ones die waiting for money that was legally theirs, but practically frozen. In the years since, the crisis has produced a strange and heartbreaking phenomenon. Ordinary citizens, driven to desperation, walking into their own banks with weapons, not to rob strangers, but to demand access to money that was already theirs. One man threatened to burn down a branch unless he could withdraw funds for his son's rent overseas. Another held staff at gunpoint to release $9,000. These were not criminals in any traditional sense. They were people who had done everything right and watched the system designed to protect them turn into the very thing that ruined them. For years, Riyad Salameh denied any wrongdoing, even as investigators in at least 7 different countries opened probes into him for embezzlement and money laundering, examining allegations that he personally funneled hundreds of millions of dollars out of the country through shell companies and family members. He finally stepped down in 2023 and was arrested in Lebanon in September 2024. But accountability has moved at a crawl. To date, formal investigations have only managed to trace a small fraction of the money in question, a few tens of millions out of what may be billions. No major bank owner has faced real consequences. The politicians who borrowed recklessly for decades are, for the most part, still in power. Even now, years later, Lebanese depositors are still waiting. Officials continue to promise reform, continue to promise a plan to eventually repay what people are owed, but eventually has already stretched past 6 years for many families. Trust, once the entire foundation of Lebanon's banking system, has not been rebuilt. It may never be. What happened in Lebanon is not simply a story about one corrupt banker or one struggling economy. It is a warning about what happens when the people guarding the vault convince an entire country to trust them completely, and then decide that trust is something they can spend too.